Okay, let's see. On the top, you just print the name of organization, and on the right, B. You see B, capital B. There's ID number. Okay, and you just apply this ID number when you begin your business. And the day incorporate, and then total assets. All right. From number 1 to number 10, that is income. Very similar to individual. However, you can see what's the difference here. And eventually, from number 1 to number 9, I should correct myself. I should say it's very similar to Schedule C. Schedule C, if you compare this to Schedule C. Okay, very similar. See, number 1, that's gross income. That means everything. However, here, you know, the difference is you are cash method or accrue method, right? Right? Remember we talked about that? Cash method means only when your business receive cash, you enter the number here, right? Say for example, you perform your job. However, your customer has not paid you yet. If you are cash method, you don't keep the number here. Got it? But if you are accrue method, doesn't matter you receive the payment or not, you have to put the money here. Okay, so this is the number 1. Number 2, cost of goods sold, right? So we talked about this also, right? Before. And so that's why I say if you have your choice, you better off stay in a service business, not in the manufacturer, don't involve reseller, don't involve wholesale, okay? Because you involve the goods, you involve a whole lot more complicated area. Eventually, we don't have time to touch about that. That is called cost accounting. That's very complicated. Okay, so hopefully you are in the service business, so you have 0 here. You don't have any cost of goods. Number 3, that's you gross income deduct your cost of goods sold. Okay, and number 4, dividend. Oh, this is very important. By the way, I may have a topic for this. Any of you still not pick out your topic yet? You all pick out your topic already? Your final project? I believe I have still few topic, because for the dividend is a very important exemption. Okay. So I assume you all pick out your topic already. Okay. I assume. If not, okay. Tracy, go to ask Catherine. I need it. After only 1 page, I need it. Print from her computer. This one? Yeah. Okay. For dividend, think about this. Okay. Why is so important? We will talk about this. Okay. Maybe I have a topic for that. Why this is so important for corporate to receive dividend? Think about this. Because if you are individual, you receive dividend. You just pay your income tax, right? And that's all, right? That's all, right? So from corporation pay to individual shareholder, then we can count it is double tax, and that's all, right? However, if we apply the same rule to corporation recipient, it becomes countless. You see? Because corporation A pay dividend to corporation B, because B own corporation A share. So corporation pay is tax already, and after tax pay dividend to B, and B receive become income and pay is tax, and B maybe pay to C, and D, E, F, G, and countless, no limit. So in order to stop this, so there's a very special rule for corporation. If corporation receive dividend, there is a special rule, and this dividend income may become deduction. May become. That really means eventually your subsidiary pays you. You got it? If your corporation receiving your parent company, your subsidiary pays you dividend because your parent company, your own is share, right? So when your child corporation pay you, you don't need to pay dividend income tax. That makes sense because we just want to stop. We just want to stop the current one.
The current one?
The电脑里面。
Oh, but that's
This one I keep this. This one. With updated. So this makes sense, right? Of course it makes sense. Otherwise, we cannot stop this multiple layer income tax. It becomes endless. So if dividend recipient is a corporation, and more likely than not, you just report here, then you will see deduction below there. So you receive $10,000 dividend, you report here $10,000, but we all see deduction. You just deduct $10,000 from your total income. So that makes sense. Okay, so I may have one topic for that to talk about this issue. But anyway, I just want to make sure you understand why, if corporation is a dividend recipient, usually is tax-free. It's tax-free. The reason why it's tax-free because your child corporation, your subsidiary, pay tax already. All right. And also we will talk about subsidiary and parent corporation next semester when we talk about financial accounting. There is also a special rule. Okay, next one is interest. Interest is pretty similar. And rent. Rent, if your corporation has rent. Royalties, especially for the high-tech company in our Silicon Valley. Okay, corporation receive royalty a lot. Capital gain, and we talked about this, right? Remember 3 weeks ago? Special rule for capital loss, right? Capital gain is very similar to individual. However, anybody still remember what is the special rule for corporation incur capital loss? Anyone? Remember that? What's the special rule? If you are a corporation and your company incur, you know, yeah, carry back for how many years? 3 years. You must carry back for 3 years to offset the previous 3 years to look if you have any capital gain. Okay, this is a special rule. You don't have an option. If this year your corporation incur any capital loss, okay, you have to carry back this loss, go back to up to 3 years. So first, second, third. From the third year before, see if there any capital gain at that time. If no, then you look at the second year. If no, then the last year. Any capital gain there, you have to offset first. You just offset, and maybe you can see the refund, tax refund. Okay, and then whatever the balance left, you carry forward, but only carry forward for 5 years. Only 5 years. So after 5 years, you cannot use this capital loss. It's gone. It's just gone. Okay, for tax purposes, it's gone. Compared to personal. Okay, for personal individual capital loss, you cannot carry back. You cannot carry back to claim refund. You can only carry forward. And each year, if there is no capital gain, you can use $3,000 offset your ordinary income only. Okay, and any year you have a huge capital gain, you offset. And then if you can offset just each year, 2,000 years until you die, until your lifetime. Okay, so those two different rules, different. Just remember. Okay, next one is this is a very important one. I like it. Number 9. We talked about this already, right? NOL, net, right? Operating loss, NOL, or net gain, okay, from something else. Okay, this is a very important. NOL, there's no limit. You just carry it. Okay, just carry it. We may discuss this. Okay, so you know the number 9 is NOL. Okay, net gain or net loss from the phone 4797. Number 10, other income. Okay, and then 11, that's total. Okay, then from 12 to 28, there's more like expenses. So 12, compensation to your officer. That means top management. Okay, top management.